In a tumultuous day for the U.S. stock market, the Dow Jones Industrial Average plummeted nearly 900 points, closing down 890.01 points or 2.08% at 41,911.71. This dramatic decline, which marks the worst session since the pandemic began, comes amid rising fears of a recession fueled by uncertainties surrounding President Donald Trump's recent tariff policies. As analysts decipher the implications of these economic shifts, the market's response has been swift and severe, indicating mounting investor anxiety. The S&P 500 also felt the weight of these economic concerns, falling 2.7% to 5,614.56, its lowest level since September. The tech-heavy Nasdaq Composite suffered the steepest losses, tumbling 4% to close at 17,468.32, marking its worst day since September 2022. These drops have pushed the S&P 500 down 8.7% and the Nasdaq down nearly 14% from their recent highs, intensifying discussions around potential corrections in the market. The sell-off was particularly pronounced in technology shares, with the so-called Magnificent Seven, comprised of major players like Tesla, Alphabet and Meta platforms, all experiencing significant declines. Tesla shares fell by 15%, their worst one-day performance since 2020. This decline is symptomatic of a broader trend as the electric vehicle maker navigates challenges in meeting production targets and sales expectations, compounded by the market's reaction to Trump's impending tariffs on imports. In the wake of this market turmoil, President Trump addressed concerns over the economy, suggesting that it is undergoing a period of transition. His comments came during a Fox News interview where he did not rule out the possibility of a recession, further fueling investor trepidation. "What I have to do is build a strong country," Trump stated, seemingly downplaying the stock market's fluctuations. Economic experts have been quick to connect the dots between Trump's tariff announcements and the subsequent market reactions. Treasury Secretary Scott Bessent previously warned of a potential detox period for the economy as the new administration implements cuts to government spending. Analysts from Goldman Sachs have also revised their growth forecasts downward, attributing the changes to concerns over the tariffs' impact. The heightened volatility in the market is reflected by a spike in the CBOE Volatility Index, which reached its highest level since December. Investors are increasingly seeking refuge in defensive stocks, with consumer staples like Johnson & Johnson and Mondelez showing slight gains even as broader market indices plunge. As the market grapples with these uncertainties, some analysts remain optimistic about a potential recovery later in the year. UBS Global Wealth Management predicts that the S&P 500 could rise by 14% by December, citing strong fundamentals and growth in artificial intelligence as potential catalysts. However, the looming tariff policies and their implications for inflation and economic growth continue to overshadow any immediate optimism. In a surprising turn of events, President Trump announced his intention to purchase a Tesla, expressing confidence in Musk and calling for support from his political base. Despite his attempts to rally support for the electric vehicle maker, analysts highlight that the recent decline in Tesla's stock is primarily driven by fundamental concerns, including a significant drop in sales in key markets like Europe and China. As the market continues to react to the evolving economic landscape, the question remains, how will these tariff policies shape the future of U.S. companies and the broader economy? Investors are keenly watching for signals from the administration and economic indicators that could point to stabilization or further declines in the market. The unfolding situation underscores the delicate balance between policy decisions and market performance, a dynamic that will be crucial to monitor in the coming weeks. In a striking display of his ongoing support for tech mogul Elon Musk, former President Donald Trump recently announced his intention to purchase a brand new Tesla. This declaration comes amid turbulent economic conditions, particularly as the U.S. stock market faces significant volatility, largely attributed to Trump's controversial trade policies. On March 10, 2025, the stock market experienced a dramatic plunge, with the Nasdaq falling by 4%, marking its most substantial decline since 2022. The S&P 500 also suffered, dropping nearly 3%. This downturn wiped out approximately $1.7 trillion in market value, a staggering loss that has alarmed investors and analysts alike. In particular, shares of Tesla, Musk's electric vehicle company, plummeted by 15%, leading to widespread discussions across social media platforms including X, where the hashtag stock market crash began trending. While investors were grappling with these distressing figures, Trump was active online, engaging in a flurry of posts on his platform Truth Social. Between noon and 6 p.m. the same day, he made over 100 posts, predominantly sharing articles that praised his administration and its policies. Notably, he continued to endorse the very tariffs that many analysts believe contributed to the market's crisis, including articles with headlines such as "Trump's tariffs will create millions of jobs." These posts underscore Trump's steadfast belief in the benefits of his economic agenda, despite the immediate negative repercussions reflected in the stock market. A White House official attempted to downplay the market's decline, suggesting that animal spirits, a term that captures the psychological factors affecting investor behavior, were driving the sell-off rather than fundamental economic issues. However, Trump's own comments during a Fox News interview hinted at a more ominous outlook as he left the door open for the possibility of a recession, stating, "There is a period of transition because what we're doing is very big." This lack of a definitive reassessment of the economic landscape appears to be feeding investor anxiety. As Trump navigates this complex economic environment, he is also pushing significant changes to Social Security that could have lasting impacts on millions of Americans. His proposals include eliminating taxes on Social Security benefits, a move that could initially provide relief for seniors but may lead to long-term funding problems for the program. Currently, about 40% of beneficiaries are taxed on their benefits, a figure that has grown significantly over the decades. Critics argue that eliminating this tax could exacerbate the financial challenges facing Social Security, potentially leading to reduced benefits in the future. In tandem with these proposals, Trump's administration has initiated drastic cuts within the Social Security Administration (SSA), including the layoff of over 7,000 employees. These cuts are part of a broader effort to reduce federal spending but raise concerns about the capacity of the SSA to deliver essential services. Experts warn that such reductions will likely lead to longer wait times and diminished access to necessary resources for beneficiaries, further complicating an already strained system. As the repercussions of Trump's economic policies unfold, his relationship with Musk, who is not only a key player in the tech industry but also a vocal supporter of many of Trump's initiatives, remains a focal point of interest. Trump's planned Tesla purchase could symbolize more than personal support for Musk. It may also reflect his ongoing commitment to promoting innovation within the U.S. economy, even as he faces mounting criticism and challenges in other areas. Looking ahead, the intersection of Trump's policies, investor sentiment, and the broader economic landscape will be critical to monitor. With significant changes on the horizon for Social Security and ongoing fluctuations in the stock market, the coming months will likely reveal how these dynamics play out and the extent to which they will impact American citizens. As the former president continues to assert his influence in the tech and economic spheres, the ramifications of his actions will undoubtedly shape the future of both industries and the nation's financial stability. As the dust settles on the early days of Donald Trump's second presidency, the political landscape is marked by both chaos and significant policy shifts that are likely to have lasting repercussions. Economic forecasts have shifted dramatically, reflecting the disruption caused by the administration's approach to governance. Analysts are now grappling with the implications of Trump's policies, which have fundamentally altered the outlook for growth and stability in the American economy. Economic analysts have reported a sharp decline in business and consumer confidence since Trump took office. The stock market has experienced volatility reminiscent of a roller coaster ride, and labor market indicators suggest an uptick in layoffs. According to a recent analysis, the U.S. economy, which previously boasted low unemployment and rising wages, now faces the specter of recession as forecasters downgrade their growth predictions. If the economy was starting out in quite good shape, it's probably in less good shape after what we've seen the last few weeks, remarked Donald Rismuller, chief economist at Strategas. The root of this economic pessimism can be traced back to several key policy decisions made by the Trump administration. The imposition of tariffs has raised prices and created uncertainty among trading partners, while cuts to federal employment have raised concerns about rising unemployment. Additionally, aggressive immigration policies are likely to impact sectors that rely heavily on immigrant labor, such as construction and hospitality. Michael Arch Strain of the American Enterprise Institute warned, what President Trump has proposed will not cause a recession, but it will slow economic growth. Moreover, the administration's chaotic execution of policies, characterized by abrupt changes and reversals, has only added to the uncertainty. Tariffs have been announced and delayed, while federal job cuts remain mired in legal challenges. Such unpredictability not only hampers immediate economic activity but also discourages long-term investments by businesses, as they remain hesitant to commit to new projects in the face of shifting governmental priorities. On the international front, Trump's treatment of Ukraine has raised alarms. His administration's decision to reduce aid and intelligence sharing with Ukraine has sent shockwaves across Europe, leading nations to reconsider their defense strategies amid fears that U.S. support can no longer be taken for granted. This shift could have far-reaching consequences, including potential nuclear proliferation. As noted by Polish officials who have indicated a reconsideration of their own military strategies in light of U.S. policy changes. The restructuring of American foreign aid, particularly the dismantling of the United States Agency for International Development (USAID), presents another area of concern. The Trump administration has significantly downsized this agency, which historically has played a crucial role in providing humanitarian assistance globally. As Secretary of State Marco Rubio recently indicated, a staggering 83% of USAID programs are slated for cancellation, potentially jeopardizing vital life-saving initiatives. Domestically, Trump's administration is also waging a culture war through federal policy. His aggressive stance against diversity, equity, and inclusion (DEI) initiatives has led to investigations into institutions and programs, creating an atmosphere of fear among educators and researchers. This concerted effort to reshape the cultural landscape of America could have lasting effects, particularly in academia and nonprofit sectors. As Trump continues to navigate his presidency, the politicization of the rule of law remains a pressing issue. The Justice Department, under his influence, has shown signs of prioritizing political loyalty over impartiality, with implications that could affect the legal landscape for years to come. This shift in the balance of power within federal institutions raises fundamental questions about the future of democratic norms in the U.S. In conclusion, as Trump's presidency unfolds, the combination of economic uncertainty, foreign policy shifts, and cultural battles will shape the trajectory of his administration and the nation. While some analysts remain optimistic about the resilience of the U.S. economy, the overarching sentiment is one of caution. The long-term impacts of Trump's policies, both domestically and internationally, will likely define his legacy and as the political landscape continues to evolve. The repercussions of these early decisions will be felt for years to come. As economic uncertainty looms over the United States, a confluence of factors has sparked fears of a potential recession, with consumer spending emerging as a critical variable in the equation. Recent fluctuations in trade tariffs, especially those affecting Canada and Mexico, alongside the threat of government shutdowns, have left many Americans feeling anxious about their financial future. This sentiment was underscored by a sharp decline in stock markets, with the Dow Jones Industrial Average dropping approximately 2% and the Nasdaq experiencing a 4% loss. Economists often cite growth, unemployment, and inflation as key indicators of impending recessions, but they also emphasize the importance of consumer confidence and business sentiment. Gerald Cohen, chief economist at the Kenan Institute of Private Enterprise, articulated the crux of the issue: if you have uncertainty about what policy is going to look like, that is going to cause you to not make big important decisions. The instability stemming from these policy shifts has contributed to an environment where consumers and businesses are hesitant to commit to spending, which could ultimately tip the economy into recession. The Economic Policy Uncertainty Index, which analyzes news articles, tax data, and insights from the Federal Reserve Bank of Philadelphia, currently indicates the highest level of uncertainty since the pandemic. Scott Baker, one of the index's co-creators, noted periods of high political uncertainty and negative economic growth are correlated. This correlation is becoming increasingly apparent as consumer sentiment wanes. The University of Michigan's Consumer Sentiment Index fell nearly 16% in February compared to the previous year, a stark reflection of growing unease among consumers. The National Federation of Independent Business recently reported a drop in small business optimism, with its index falling 2.1 points to 100.7. Still above its 51-year average, but indicative of a troubling trend. Emily G., an economist at the Center for American Progress, pointed out that the erratic nature of the Trump administration's policy decisions has caused significant disruption for both public agencies and private sector businesses. It's damaging for the functionality of essential public agencies, but also for a lot of private sector employees and businesses too, she stated. Despite these challenges, President Trump has downplayed concerns over the economy. In a recent interview, he dismissed the Atlanta Federal Reserve's forecast of a potential economic contraction, stating, "I hate to predict things like that." However, his contradictory remarks on tariffs have only fueled investor anxiety. While some officials have sought to reassure markets, the reality remains that consumer spending, which constitutes 70% of GDP, is pivotal. Joanne Su, director of the University of Michigan's surveys of consumers, emphasized, if consumers cut back on spending due to a significant drop in consumer sentiment, that would make it much harder to avoid a recession. The political landscape adds another layer of complexity to this economic situation. A national poll conducted by Emerson College revealed a decline in Trump's approval rating, with many voters expressing discontent over his handling of the economy, particularly concerning tariffs. As public sentiment shifts, a growing number of Americans, 39%, report feeling financially worse off compared to the previous year. Global markets reflect this uncertainty, as evidenced by the recent turmoil in U.S. stocks. Following Trump's comments about the economy being in a period of transition, the S&P 500 fell nearly 3%, while European markets remained relatively steady, indicating a cautious approach among investors. Analysts highlight that the prospect of a recession, while perhaps premature, is enough to instill a defensive mindset among traders. The ongoing challenges underscore the delicate balance between consumer confidence and economic health. As businesses and households begin to hold off on spending due to uncertainty, the potential for a slowdown in economic growth becomes increasingly tangible. While some believe that the long-term outlook remains positive, with manufacturing jobs returning to the U.S. due to tariffs, the immediate future appears fraught with risk. Ultimately, the path forward hinges on consumer behavior. A resurgence in confidence among consumers could stave off recession fears, but further declines in sentiment could lead to significant economic repercussions. As the political and economic landscape continues to evolve, the focus will remain on how both consumers and businesses respond to the unfolding situation, with the potential for lasting impacts on the nation's economic trajectory. In a pivotal confirmation hearing on March 4, 2025, Elbridge Colby, President Donald Trump's nominee for the Undersecretary of Defense for Policy, faced intense scrutiny from Senate Republicans regarding his stance on the escalating nuclear threat posed by Iran. Colby, who previously served as a senior policy official during the Trump administration, characterized a nuclear-armed Iran as an existential danger to the United States, aligning with the administration's hawkish foreign policy stance. Senator Tom Cotton, a prominent voice on the Senate Armed Services Committee, pressed Colby on his past comments regarding the tolerability of a nuclear Iran. Colby unequivocally affirmed, "Yes, a nuclear-armed Iran, especially Senator. Given that, we know they've worked on intercontinental ballistic missile range capabilities and other capabilities that would pose an existential danger to the United States. This assertion comes amid a backdrop of growing concern among GOP national security hawks about Colby's previous remarks suggesting that the consequences of military action against Iran could be worse than allowing the country to develop nuclear weapons. Colby's nomination has highlighted the ongoing debate within the Republican Party about the best approach to Iran's ambitions. Sources close to the discussions reported that some party members had considered opposing his nomination due to these contentious past statements. However, Colby reassured the committee of his commitment to military readiness and provided a robust defense of his position, stating, "If confirmed, I would believe it's my responsibility to provide credible good military options." The hearing also featured Vice President J.D. Vance, who lauded Colby's understanding of the interplay between military power and economic strength. Bridge has been particularly aware of and worried about the degradation of our defense industrial base, Vance asserted, emphasizing the need for a robust military readiness in a time of geopolitical tension, particularly in relation to adversarial nations like China and Russia. Colby's policy priorities are expected to align closely with Trump's established defense strategies, which emphasize putting Americans' interests first and pursuing peace through strength. He noted the tangible risks of major conflicts, stating peace and the protection of American interests in the world cannot be assumed. His comments reflect a broader acknowledgement among military leaders that the U.S. must maintain formidable defense capabilities to deter potential aggressors. In the midst of these defense discussions, the Trump administration is also navigating budgetary challenges. The Secretary of Defense Pete Hegseth has proposed significant cuts to the defense budget, aiming for an annual reduction of 8% over the next 5 years. Critics argue that such drastic cuts could undermine military readiness. Historically, budget reductions have often led to underpreparedness, as evidenced by past military engagements that suffered due to insufficient funding and resources. Moreover, the Department of Defense recently announced a cessation of its entire social science research portfolio, which includes studies on critical issues such as climate change and migration patterns. This strategic pivot is aligned with the administration's focus on advancing military capabilities through innovative technologies including artificial intelligence and hypersonic weaponry. The decision is expected to save over $30 million in the first year and reflects a commitment to fiscal responsibility, ensuring that every taxpayer dollar contributes to national defense. As Colby's nomination moves forward, the implications of his confirmation, combined with the administration's budgetary strategies, will be closely monitored. The increasing focus on military readiness and technological advancement in defense policy underscores a critical moment for U.S. national security. Looking ahead, the administration's ability to balance budgetary constraints with the imperative of maintaining military superiority will be pivotal in addressing both current threats and future challenges on the global stage. As economic uncertainty looms over the United States, the stock market is feeling the effects of President Donald Trump's recent comments regarding potential recession. Following a tumultuous trading day that saw the S&P 500 plummet by 2.7% on Monday, analysts and investors are grappling with the implications of the administration's tariff policies and their potential fallout. The market downturn was exacerbated when Trump, in a Fox News interview, acknowledged that his aggressive trade policies could lead to economic challenges. "We may go up with some tariffs. It depends. We may go up. I don't think we'll go down, or we may go up," he remarked, leaving investors in a state of heightened anxiety. Following this, retaliatory tariffs by China on U.S. agricultural products came into effect, fueling further market volatility. David Bahnsen, chief investment officer at the Bahnsen Group, noted that the real concern is not just the tariffs themselves but the uncertainty surrounding them. The market volatility is much less about the bad news of tariffs and much more about the uncertainty of tariffs, especially uncertainty as to what the policy is, where it is headed, how long it will last, and what the end result will be. He explained. Such unpredictable shifts in policy have left businesses and investors struggling to plan for the future. As the S&P 500 approaches a correction phase, defined as a decline of 10% or more from its most recent high, there are fears that the market's losses could signal broader economic troubles. In fact, the index has now erased all gains made since the election, with technology stocks experiencing even steeper declines. Tesla, for instance, saw a more than 15% drop amid worries about its sales performance and CEO Elon Musk's distractions from his role in the Trump administration. Meanwhile, Secretary of State Marco Rubio is navigating complex diplomatic waters as he prepares for critical talks in Saudi Arabia. Rubio has indicated that Ukraine may have to concede territory to Russia to achieve peace in the ongoing conflict that has persisted for 3 years. These discussions come on the heels of a contentious Oval Office meeting between Trump and Ukrainian President Volodymyr Zelensky, during which tensions flared over U.S. support for Ukraine. In a surprising twist, the administration's efforts to cut federal spending have also drawn scrutiny. A federal judge ruled that Elon Musk's Department of Government Efficiency is subject to public records laws, compelling the agency to release documents and communications previously kept under wraps. This ruling signifies a push for transparency in an administration often criticized for its opaque decision-making processes. In the wake of these developments, analysts are increasingly pessimistic about the economic outlook. Goldman Sachs has raised the likelihood of a U.S. recession to 20%, while J.P. Morgan Chase posits a 40% chance of a global recession due to the extreme measures taken by the Trump administration. Economists note that while current economic data still shows some strength, the uncertainty surrounding tariff policies and the federal workforce cuts are beginning to take a toll on consumer sentiment. As Wall Street reacts to these tumultuous economic conditions, the question remains: how will Trump navigate the stormy waters of both domestic and international politics? With his administration facing increasing pressure from business leaders and lawmakers alike, the coming days may prove crucial in determining both the economic trajectory of the United States and the fate of ongoing diplomatic efforts abroad. The market's future, much like the geopolitical landscape, appears fraught with uncertainty.